States.
Oh, yeah, all over. Yeah. Okay. I'm just setting the streaming up. Wow, this is a big one. Okay. Oh, right. Okay. Okay, we're live now. Welcome, everybody. Good morning. It's 9 a.m. here in Sydney. Yes, I am back in Sydney. I am back from London from the Global Excel Summit, which was absolutely amazing. In December, however, I went to Las Vegas and I met the fabulous Josh Aronoff. Have I said I forgot to check the pronunciation of your surname. Is that correct,
It's
Josh?
a tough last name to pronounce, even tougher to spell, but you got it right.
I did. Okay. Welcome, Josh. It is so wonderful to meet you. Not in person. We met in person for the first time, and I
Yeah.
wasted absolutely no time in asking Josh to run one of these for me. So, my name is Danielle Stein Fairhurst. I'm a financial modeling specialist, and one of the things that I love to do is to invite specialist speakers which are interesting for financial modelers, to talk to us about different topics relating to financial modeling. And when I heard Josh's session in Las Vegas, he spoke live at the Active Cell. I asked him to do something similar for us because I think the actual versus budget variance report is something that finance professionals and particularly a lot of financial modelers need to do. So I'll let you introduce yourself, Josh. Basically, he is, as you can see on his t-shirt, he is your CFO guy, and he is huge. He's got a massive following, and if you don't following him yet on LinkedIn, YouTube, all over the place, then you definitely need to. Don't go anywhere, Josh. Where are
I'm
you
right here,
going? I'm just giving
just
you a
fixing my
big
lighting.
Okay, I'll pass over to you, Josh. So we are live. We've got tons and tons of people on the call. Yep, we've just hit over 100. So do feel free to put any questions or comments. If you're joining us live, there's actually a Q&A section at the bottom. So live questions go there. Otherwise, on the chat. So I will pass over to you, Josh. Take it away.
Awesome. Thank you for that introduction, Danielle. It is great to be here. I see some familiar faces from the chat over here. I see some people also subscribe to my newsletter, which is really great. I am going to waste no time and go ahead and share my screen and talk a little bit about today's session. And the topic is going to be my favorite topic in all of finance and accounting, and probably even all of Excel. And that is the budget versus actuals report. But first, just to expand a little bit on what Danielle mentioned, a little bit about me. I am excited to share the fact that I am working on three really fun projects. One is Your CFO Guy, where some of you may already be familiar with my content, where I share daily finance and accounting tips to an audience of over 400,000 people. And just every day, so grateful to connect with so many different people, learn from other people, help them on their career, and just talk about what I'm so passionate about, finance, accounting, and Excel. I also am the CEO and founder of a company called Mighty Digits. We do outsource finance and accounting consulting. We primarily work with startups and we do anything and everything that you need out of a finance and accounting function. And then this company, we're just about getting off the ground. We have a tool called Model Wiz. It is an Excel add-in, and you can actually try it for free at our website, which will give you access to tons of finance and accounting templates directly into your Excel file. Now, you may recognize some of my content on LinkedIn. That is where I post the majority of the information over here. This is by far my most successful post of all time. And, it's interesting. When I posted this, I was making an Excel course and I thought, it would be pretty cool if I just did an infographic showing all the different areas that we're talking about in this course. I had no idea what to expect. And then I checked my stats and it just caught on like wildfire. But I also, as I mentioned, have a newsletter. Every Wednesday, I post information about Excel, and every other day of the week, I have another topic where Monday, I talk about accounting related information. Tuesday, I talk about financial planning and analysis. Wednesday is Excel. Thursday is a bit of a day off. And then Friday is the CFO files, where I like to just talk about the soft skills and productivity hacks that I've picked up in my journey in my career.
That's
You may
amazing. No wonder you have got so many followers. You've got incredible numbers.
have Thank you. I appreciate that. A lot of my energy and focus specifically is being put into my YouTube channel. We just launched another video earlier today, and it's been a really fun journey, a slow journey, but making videos is just a ton of fun. So to anyone who's following along on the journey there, thanks for being a part of it. And then, of course, this is just a little bit of a preview of that web app that I was telling you, the plugin over here, where you could try this for free and get access directly to these finance and accounting templates. So that is an extended introduction of myself. I would love to now set the stage for what we are going to talk about, and that is you have been hired as a new VP of finance for a fast-growing company. And the last guy unfortunately got the boot. He wasn't able to keep up. And the investors are pretty demanding. They want to understand what exactly the company is forecasting is going to take place into the future. They want to also get insights into the past performance of the business. And management, on top of that, also wants to get insights into what exactly is happening before the information goes to the board. And the same thing with department heads. Department heads want to understand what's happening in their actual department and how much of a budget they have for additional initiatives. So this may be an easy question given the title of today's presentation, but I want to ask everyone, which report are you going to use? You only have one report. What is that report going to be?
Would you like people to add their answers into the chat?
Sure. Why don't we go ahead and do that? Why don't you provide some information? What report would you share if you were newly hired in this company and you needed to wow investors and management and the department heads? What report would you choose? Amber, you got it. Budget versus actuals. Are there any other reports that anyone would suggest? Okay,
Yeah.
budget versus actuals is totally fine.
Yeah.
There actually are a number of reports that a lot of people would typically produce. So for those of us not as familiar with accounting, I think everyone should really understand financial statements, what they are and how to read them. And these three financial statements, this is oftentimes how financial information is presented. You have some sort of summarized profit and loss, which will tell you the profitability of the business. You can have a summarized balance sheet, which can tell you the position of your business. And then finally, there's the statement of cash flows. For those who are utilizing the accrual basis, you could see where exactly your cash is going. And this is usually where people stop. They just provide one of these reports. They may not even provide it this pretty, or it'll just be a standard export with tons of details from their accounting system. And it could overwhelm readers and really not lead to those insights. Whereas instead, if you were to prepare this report, the budget versus actuals, well, what I love about this report, as a little bit of a preview, is you get to understand what happened via the key metrics in your business. So this is a mixture of both your profit and loss and your statement of cash flows. And then you could also understand how that compares against what you thought was going to happen. Now, there are a lot of misconceptions about the budget versus actuals report that I'm going to clear in this tutorial here. But the general idea is that to me, this is really the one report that encompasses pretty much close to everything that you need in this one snapshot. So over the next 60 minutes, I'm going to show you what exactly a budget versus actuals report is, how you can organize your information in Excel. Now, for those of you who don't have your Excel file actually open, later on in the session, we're going to be building this dashboard together, taking some sample data and converting it into a very scalable manner to allow us to then easily manipulate it. And then it'll be a one-step process to easily update it each and every single month. So let's start with a question. What exactly is a budget versus actuals report? Now, again, like we spoke about, the key is that we want to compare what we thought was going to happen into the business to what actually took place in the business. And a huge reason for why I find that this is so valuable is it really forces you to think about the entire business model and every area of the business and to ask yourself, how exactly is this process working? So maybe this is where you dive into the expenses and you realize that you're overpaying a vendor, or you're subscribed to a monthly subscription that your company is no longer using. Or maybe you analyze your actual sales process. And here you can drill down into each acquisition channel and understand which ones are driving the majority of your leads and which ones aren't. And it's through this process that as you actualize each and every single month, you can then bridge that gap and make any very quick changes that you need to make. So before we can talk about how to prepare a budget versus actuals report, let's talk about what exactly a budget is and how to prepare that. So a few misconceptions that I want to clear up over here and some best practices in talking about a budget. First and foremost, it should be built collaboratively. Now, for those of you who are working in finance and accounting, it's easy if you're the one who's in the spreadsheet to think I need to be the only one who's preparing all of this information. But in reality, you're only as strong as the information you have access to. And most of the time, you don't have all the details on all the contracts of the business and all the customers and the business model. So it's important to work with other stakeholders, whether that be the CEO, whether that be the department heads, or anyone else in the business, to build a defensible budget. Now, this is over here a bit of a debatable one. I'm curious for people in the comments. Depending on your company size, you should include all three financial statements. I've met people who swear by the idea that everyone should always have all three financial statements in a financial model or a budget versus actuals report. And some people feel it really depends on the company size. So I'm curious if you want to just put in the chat, do you guys have a preference? Do you believe that all three financial statements should be included, or are there exceptions to that rule?
Yeah, for
And while
myself,
those
I always think you do need to have all three eventually, but you usually spend the majority of the time when you're putting together the budget, you spend most of the time on the P&L. So that would be, where the detail, where you spend the majority of your time, and then you would overlay the financials over the top of that towards the end of the process. That's generally,
totally.
yeah.
And and I see a lot of diverse answers here. Some people, like I expected, swear by the fact that it needs to be all three financial statements, while other people say, I have an answer over here from Vanessa who says it depends on the needs of the business, which, is true. If you think about it, if you're following the cash basis of accounting and you don't really have any CapEx requirements, maybe you'll get by with just a profit and loss. And it really can depend. Also, really large organizations, sometimes they don't have a three-statement model because there's just so much going on. And instead, you have someone just focusing on a specific area of the business. But this other part over here, I think every model should really have, and that is building it bottoms up. A bottoms up forecast or a bottoms up budget. Someone asked, what's the difference between a forecast and a budget, or budget versus forecast? And I usually use those terms interchangeably, though to me, typically a budget is in the past and the forecast may be rolling. So you're comparing your updated information. But either way, I'm a big believer. These should all be built bottoms up. So you should, when I say bottoms up, you should have your inputs and showcase how those inputs get you to your outputs. So sometimes I'll be working with a startup and they'll say, well, our total addressable market is, $30 billion. And if we just capture 1% of that market, well, that's our budget. And that doesn't really inform you of anything. But when you build it from a bottoms up perspective, you now have a real reverse engineering of what's happening in the business, which will allow you to then get to the outputs, and you could then see, okay, how much do I need to expend in each of the different areas of the business as such.
Yeah, which comes to the whole point of a financial model. Like, you need to have all of those linkages and have a lot of the expenses will be driven from the revenue or from the customers, and having all of those, it basically ends up being a financial model, doesn't it? Because if you make any changes, you want that to be reflected right throughout the entire budget.
Totally. I mean, if you think about it, like the way you would even define a financial model, it's really just an environment where inputs drive outputs, right?
Yeah.
So that's a really good note there. And then finally, a lot of people ask, okay, well, how do I do this budget versus actuals? I'm going to prepare a forecast, and then how will I be able to actually compare against that forecast? So I'm going to dispel the myth for how to handle that. What you in essence do is you'll build your first pass of the budget. Now you'll get sign off either from management or the board of directors or anyone else in the company. And you'll then save down a separate version of that budget, which again can be called a forecast, a pro forma, or a plan, or whatever. Then each month you'll have a rolling forecast and you'll actualize that rolling forecast. And you'll compare that rolling forecast against the information that you forecasted at that one place in time. And then each month, as you analyze your variances, if the variances are minor, they're minimal, you understand maybe it was just a timing issue, you can continue using that budget. But going forward, as you then continue to see maybe the information becomes stale, that's when I like to save down a new version that we then hold ourselves accountable towards. So the key thing with a budget versus actuals, if you want to be able to track a variance on something, you need to first actually track that metric. So a mistake that I've made a bunch of times in my career, I would create the most beautiful forecast. It was like a total masterpiece, and it had all these complex calculations where one cell fed into the other cell, and it just everything would unfold right before your eyes. But the challenge between that was it was very difficult to measure the actuals with that information. I didn't necessarily have all the access to the company to be able to track how many leads are coming from this channel and what exactly was the conversion rate. So if you want to include that on your budget versus actuals, you need to actually ask yourself, do I have access to this data? And if so, you'll want to make sure you have the system in place to be able to track that each month. And there are a few other misconceptions that I've heard along the way with budgeting. Some people think that you need to hit all of your targets. And if you don't hit your targets, that is just bad. And again, I don't really see it that way. In fact, I think it's just the inherent nature of building a financial model, right? The future is always changes. There's just total randomness to the universe. There's no way you're going to hit the information. But the key thing is you need to still have a story on what happened. You need to show people, I have a strong grip on the business. We weren't off by 50,000 because I'm not really sure, which means maybe next month it'll be what we're off by 100,000. You need to know specifically, we thought that our receivables collection was only going to be a net 30, but this customer pushed it to net 60 and so forth. People oftentimes just say, why do you need a budget? Budgeting is just guesswork. Well, again, if you're creating a top-down budget where you're just entering in random information into an Excel file, yeah, maybe that's guesswork. But if you really, like I mentioned, reverse engineer the business, understand what exactly is happening, how things flow into each other, well, then it's so much more than just a forecast. It's a real understanding of the business that should drive strategic decisions. And then finally, budgets should be rarely modified. The best CEOs that I work with every single month review this report in detail with me. And they understand exactly what's going on and whether we need to create a reforecast because they're operating their business based off of this financial model. So
I
to
mean,
me,
that's
a financial model should always be updated.
yeah, and that's where the
You want to
forecast.
say something, Danielle?
Yeah, I was just going to say that's where the forecast comes in, doesn't it? So the budget, you've set that previously, but if you need to make changes, then you would reforecast, and a financial model makes that really easy to do.
Exactly. And let's just see in the comments if anyone else has anything. Just feel free. You could always drop both questions and comments. I got the chat open over here. But let's continue with now how exactly to organize your data so that you can build this budget versus actuals report. And I'm sure a lot of you can relate to the idea that your information is only as strong as the data that you have access to. And your ability to manipulate that data is only as strong as the structure of your data. And that's what we're going to focus on a lot as we get to the Excel portion over here. So like we spoke about, it's common to set a budget annually, typically at the beginning of the year. So in December, there may have been a really huge uptick in a lot of budgeting activity, or maybe in January as you're finalizing all that information. I've also seen people typically like every quarter update their budget, especially as they have board meetings. And after the budget is set, like we spoke about, each and every single month, you should be reviewing that information to catch any issues early and make pivots as needed. And if there is an issue, like we spoke about, go ahead and save down a new version. There's no need to wait until the final year, assuming that the board of directors or whoever else is in charge of overseeing that budget can go ahead and do that sign off. So in terms of how to actually build this in Excel, well, the first thing that you need to do is prepare a three-statement model. Now, a three-statement model, for those of you who aren't familiar, and building off of the discussion that we just had on whether all financial models should be tied to the three statements, it allows you to take your profit and loss and connect it to your balance sheet. I'm curious if anyone in the comments can actually confirm how exactly does one connect a profit and loss to a balance sheet? There are, the way I see it, a few key accounts that it's a one-for-one mapping where if this account on the profit and loss goes up by $20, the balance sheet is going to go up by $20. And then there are a bunch of other like related accounts where maybe this affects the balance sheet, maybe it doesn't, but they're kind of like brothers and sisters as such. So net income goes to retained earnings. There you go. That is the biggest one. A trial balance to allocate as such. So net income to retained earnings is by far the most important connection between the income statement and balance sheet. But on top of that, we also have items like depreciation and amortization, which again should be a one-to-one for accumulated depreciation and accumulated to amortization on the balance sheet. And then similarly, we also have other accounts that maybe aren't a one-to-one, but for instance, your cost of goods sold can affect your inventory, or your sales can affect your accounts receivables, and so forth. Now, creating a statement of cash flows, I've never really been able to actualize via the direct method. The indirect method is so easy. I'm curious, does anyone want to comment in the comments over here? How exactly can one build a statement of cash flows via the indirect method? And if anyone has ever built and actualized via the direct method, I'd be curious to hear how exactly you've done that as well.
I think it's probably one of the most challenging parts of modeling is building the financial modeling, is getting it to balance and figuring out, what links to what. From a technical perspective, it's not that difficult, but that's one of the things that the Financial Modeling Institute, the level 1 is just the basic fundamental skill, is learning how to link those statements to each other. So yeah, we've got a few.
Exactly.
Yeah.
It looks like we're getting a few responses. Some people use DSO, DPO, and DII to project out working capital. That's a common approach. Taking the change in net working capital and depreciation, Joseph says that when you start with net income, that is correct. The changes in the balance sheet, that's the key. Susan, you nailed it. The idea is, if you think about it, the statement of cash flows via the indirect method, all you're really doing is you're taking the net change between each and every balance sheet account, except for cash. Now, if just think about this here. When this really clicked with me, it all just made so much sense. We know that a balance sheet needs to tie. For those who aren't familiar, that means that assets, what the business owns or substantially controls, need to equal the amounts that you owe to the creditors of the business, which are the liabilities, or the owners of the business, which is owner's equity. So if assets need to equal liabilities and owner's equity, that means that the net change from one period to the next of your assets needs to also equal the net change to the liabilities and owner's equity. So if you flip the sign for one of them, for let's say with your assets, you take last month's balance minus this month's balance. And then for your liabilities and owner's equity, if you take this month's balance minus last month's balance, well, now the net change in all of your accounts should really equal to zero, right? Because we take one half of the equation, we invert it, the rest is the same, now it equals zero. When you remove cash, there's your plug. That showcases how exactly your statement of cash flows got produced. So when I really understood that, it all just clicked for me, and it may not be so easy without me showcasing it here, but hopefully that helped for everyone else.
You said you had another webinar coming up next week where you focus on financial modeling. Will you be getting into more detail on that one?
So I won't necessarily in that, actually, I take it back. We will be going over details on how to build a three-statement model as part of it. That webinar is going to involve showcasing the different levels of forecasting and how each level builds on the next, and how the ultimate level 4 forecast allows you to have this comprehensive view of where the business has been, where the business is going, and all the inputs that can shape that future, so you can get those insights via those dashboards.
Okay,
So it will be a bit more detailed.
Okay, I've just dropped a link in the
Oh,
chat.
thanks so much for sharing that. Yeah, I'd love to see everyone there.
Yeah, cool.
Awesome. Okay, so we spoke about defining all the metrics. Again, I like to always include a set of assumptions and metrics related to the P&L on a summarized basis, and then just some cash metrics. I usually don't really do a budget versus actuals on the balance sheet, because instead I just analyze the cash movements directly from the statement of cash flows. Now, some other details on how I like to think about budget versus actuals. Some people like to do this on a detailed level where they analyze each and every item in their chart of accounts and they compare the budget versus actuals there, which you certainly can do. A lot of accounting softwares allow you to upload, for example, if you're using QuickBooks Online, you could upload an entire budget P&L or a budget balance sheet and it'll run that report for you. But I find that that's a bit of information overload, and a lot of times you won't even need to go into all those details. So that's why I like to summarize this, and all the dashboards I create, it's usually a summarized version of the information. And then as needed, I'll drill into the details to learn what exactly happened. Now, this is another key thing over here that I'm going to showcase exactly how to do this in Excel. But the idea is that you want to show both the number variance as well as the percentage variance. I'm curious, does anyone have any thoughts on why that's so important? What's wrong if we just show the number variance or if we just show the percentage variance? You could read the answer if you want some help, or you can go ahead and post that in the chat.
Yeah, it's the percentages could be really big and it's quite hard to get an idea of materiality, isn't it, when you're looking at percentage?
Exactly. So if you just analyze the number variance, well, you may look at something that's $1 million and say, oh my God, I can't believe we were off by $1 million, until you find out that maybe you're comparing this to $300 million in cash, in which case it's 1/3% and it's pretty minimal. Similarly, you may have a variance that is 400%, but really only amounts to a few $100. So they really both need to be analyzed together in order to get the full picture. All right, and continuing, a lot of people do this differently. Some people do color coding. I'm personally a big fan of always making all good variances show as positive and bad variances show as negative. So
Yeah.
in order to do that, if you think about it, you can't just take budget minus actuals on every single account, because sometimes you'll want the actual to be higher than what you budgeted. Sometimes you want it to be lower than what you budgeted. Generally, the way financial statements are produced, all values are shown as positives. And you could have a contra account, which is a negative. But if your budget is higher than your actual for your revenue, well, that's bad, right? Because we didn't hit as much revenue as we wanted. But if your budget for, let's say, your payroll expense is higher than your actual, though, that's good. You had actually less in expenses. So for that, I actually choose different formulas. I'll have actual minus budget if it's an income account, and then budget minus actual if it's an expense account.
Which
And
kind of goes against normally you would just have the exactly the same formula copied all the way down, but you need to consider whether it's an expense or revenue to see the change.
exactly. I have a pretty cool video called I Built the World's Greatest Pivot Table, where I generated a budget versus actuals in a pivot table, and you could drill down to the transaction view. And what I did was the first time I did this was I created like a mapping table where I put a 1 for all income accounts and a -1 for all expense accounts. And if you think about it, all you need to do then, the formula can be consistent. You're just looking up whether you're then multiplying it by a 1 or a -1.
Yeah.
So that's another neat trick. Okay, so like we spoke about, it's extra crucial not only to show this information, but to tell the story, actually provide that commentary on what happened, why it happened, and what decision needs to be made afterwards. So before we now get into our Excel file and go over how to build this report, let's just talk about a bunch of different ways that you could actually showcase budget versus actuals. So I have 8 different ways that I'm going to show, and maybe afterwards we'll take a poll on what everyone's favorites were. But the first one is really just the most basic, right? It's just a table. You have your information, all these different columns, budget, actuals, the dollar variance like we spoke about, and the percentage variance. Now, I'm a really big fan. I always love preparing these KPI dashboards, and this is something, all of these are ones that you can make entirely in Excel. And what I in essence did in this case was I created a shape, and then I created another light shape right on top. Now, I've done this in 2 different ways. You can merge cells. I know people are like, oh my God, I'm leaving this webinar. He just said merging cells. I personally don't think it's such a bad idea if you merge cells on a dashboard. If it's a report, I'm not as much of a fan of merging cells, but that could be a separate debate. You can merge cells as one option in order to then set all this, or you can just create additional text boxes. Now, there are pros and cons of each. What I like about merging cells is you can just generate the formula directly over here. It's a lot more flexible. When you work with text boxes, what's really good is you could a lot more easily control the components. You can group them and you can style them, but actually referring to a formula, you kind of have to set it and then the information can change and can reset. It could just be a little bit clunky. So it's up to you to really decide which approach that you want to
So
take.
you mean either to have it linking to the cell directly or have the text box linking to a cell in behind in the spreadsheet somewhere. Yeah.
Exactly. Yeah. So either way, you're going to have to get it into a cell if you use a text box.
Yeah.
But what's
But
helpful
it
is that you could.
absolutely would be dynamic so that when the data
Mhm.
changes, the dashboard changes, of course. We would never hard code any of that.
Exactly. Okay, then there's also the donut. This is going to be what we're going to be creating later on. And what I love about the donut is it just gives you so much context instantly when you read this. You can see how much is shaded in, so you know how much of a hit. I think this needs to be changed over here. But you can see how much of a hit or a miss it was. And the green can signal the fact that this is a good hit, and the red can signal the fact that this is a bad hit. And what I did was I, in essence, created a donut chart here. And then I included these three text boxes to showcase hit or miss. And for this hit or miss to flip over, we're going to see shortly how we're going to do that. Does anyone want to take a guess as to how exactly you can get this to dynamically read hit or miss?
With the formula?
And Fernando says, donuts are a no-go when you achieve more than 100%. That's correct. I like to put like a max function that'll just fill it in 100% and then I'll like say the percentage over here, but that can be one of the limitations for sure of a donut.
Yeah, it wouldn't probably be appropriate if you're wanting to go. You'd probably choose a different type of chart, wouldn't you?
Yeah, I'm curious what like would it be like a maybe a bar chart? That's going to be what I'm going to be showing in a second, like
Yeah,
how it goes past the 100% mark.
yeah. You know those ones where you kind of make the two columns and then you put them over the top of each other and then show, and then that will show whether you go over 100% or not. That's how I
Yeah.
would.
Another idea could be, this is just creative thinking. Again, we're still going to be able to update this, but you could maybe take the difference of whatever is past 100% and just showcase that. And then
Oh,
readers
yeah.
will have to understand that it, went around one cycle and then that additional amount. There are some trade-offs with each of these. So similar to the donut though, its cousin is this speedometer over here. So if I was maybe preparing a budget versus actuals for like a NASCAR or a car company or something, maybe this would be more relevant. And then going back to what we were just talking about with,
Oh, yeah, that's what I
what's a
mean.
better chart?
Yeah, yeah, cool.
Yeah, you could potentially maybe have like instead of the dollar amount over here, this can show like percentage and then it'll be like above 100%.
Mm.
But what I like about this is it has a cutoff line so you can see this is what the budget was supposed to be and this is where we actually achieved it. All right, this is another common approach where you have a clustered bar chart and you could analyze one series for your actuals, the other for your budget, and then it'll shade in one color if it was a good variance, another color if it was a bad variance.
Yeah, that's a good one.
The waterfall chart is extra relevant here. What I love about the waterfall chart, and it seems like you agree, Danielle, is
Absolutely. I
it
love
allows
the
you to see cumulative values.
Mm.
So this is really good for like specifically cash flows where you could, understand what actually made up the difference between your cash flows. So I like to start with the actual budget for the metric that I'm talking about. And then these are all the metrics that surpass our budget that are good. These are all the ones that took away from the ending value. And then this is how we got to the actual. So you see the before and the after and everything that makes it up.
Mm.
And then finally, we have the thermometer chart over here. This is probably the most custom one over here. So it looks like Amber loves waterfalls as such. So those are the 8 different methods. Does anyone have a favorite for how they want to show their budget versus actuals?
Yeah, so many different options. This is great.
For sure. The lipstick chart, I haven't seen that one, but I guess that would be pretty cool. Vanessa says the lipstick chart, and Shireen is a fan of the waterfall chart.
Mhm.
Okay. Well, for the remainder of the session now, I'm going to show you how you can build this information yourself. so that you can get this beautiful dashboard. Now, Danielle, I think you already provided a link to that information.
Yes,
Yep,
yeah.
and you just provided it again.
Yeah, I sent it in
So
the
there,
email and I've just popped it into the chat.
excellent.
Yeah, nice.
Awesome.
And
So
yeah, see that the completed file that you've created has actually got some really cool visuals. So that's great. Thank you for that. So you can
yeah, my
see.
pleasure.
Yeah, yeah, fantastic.
So just a heads up, although it's a Google file, you're going to want to download it to your actual local
Yes, don't
machine.
open it. Don't open it in Google Sheets. No, just download and then open it.
That's right. Okay, so let's go over how to do this. I encourage everyone here who wants to follow along, go ahead and open up that starting file and follow along with me and actually create this. And the key before we create this dashboard is, remember, our dashboards are only as strong as the data that we have access to. But it's not only the data that we have access to, it's the actual structure of that data. And I'm going to explain a little bit with what I mean in the next few slides. So the first thing that we want to do is we're going to utilize Power Query in order to transform our data. Now, I'm just curious if anyone wants to just post in the comments how many people have actually used Power Query before and how many people this is going to be their first time. I hope that we have a lot of people this is their first time because I get to introduce them to this totally transformational Excel tool that to me is one of my favorite. Okay,
Okay,
we got a
because if
few
you're
first
not,
timers.
yeah, if you're not using Power Query for this kind of stuff, you absolutely should be.
So looks like we got a few first timers and we got a few enthusiasts. So that is great. Okay, well, I hope that everyone gets the opportunity to really become Power Query pros after this. So let's start by just getting to know our data. And we really have three tabs in our file. Just going to play this again. We have our budget tab over here, or rather our budget versus actuals tab. This is going to be where we actually showcase the final result, the output. And then, oops, let's go back. And then we have our actual tab over here, which is an export, a traditional export from an accounting system where you have the dates going across horizontally. You have the accounts going across vertically. And then I included this extra column here for that mapping like we spoke about earlier so that you can really understand how that all rolls up into a bigger picture. And then on top of that, we also have a budget tab. So for those of you who want to afterwards build this for your actual company, well, it's really simple. I just gave you the framework. Simply export your actuals, create this mapping tab, duplicate the tab, wipe the values, and then all these values in blue for us diehard financial modelers. What does blue represent?
Variables.
There you
Sorry,
go. Blue
you
is
weren't asking me,
variable.
were you?
I'm asking everyone, anyone can comment. I am curious though, I want to ask you, Danielle, for cells that link directly to another cell, it's common to have a different color for that. Are
Yeah.
you purple or green for that?
Mm, green, yeah.
Green. Interesting, because right beforehand you told me your favorite color was purple, and
I
I
know.
think I'm one of the very few who still
Tell.
use
Favorite
purple.
color is
So
purple.
I thought maybe you would be with me.
Yeah, no, I tend to use
Uh,
green.
okay, so we have these three tabs over here, and now remember, the goal is that we want to get it into this format. Now, if you think about how exactly you'll get it into this format, well, you can't really utilize like a sum ifs so easily over here because we have information going across horizontally and vertically in the information here. You technically can do it. I'm just not such a fan of how we would. You could do a sum ifs going horizontally and another one going horizontally for each and every single item on the budget versus actuals dashboard. But again, to me, that's not ideal because now you have to have separate formulas and change those references to it.
Yeah, it's
So
messy.
instead, what we're going to do is we're going to use Power Query to clean our data. Now, the reason why we need to clean our data, this to me is another thing that just really clicked for me in my journey with FP&A and Excel. It really comes down to the difference between structured and unstructured data. Now, technically, the screen that I just showed you before, it's semi-structured data, but the key thing is to really understand what structured data looks like. So does anyone want to maybe comment on the chat? Like, what are some key things that you see over here and how that differs from here? If you want to utilize the cheats that I mentioned, that's okay as well.
Yeah, we get so used to seeing it across, don't we? Seeing the dates across the top, and that just doesn't, is it, you know, if you tried to run a pivot table over that, it's just not very easy to do. You'd have to, it doesn't update automatically. So I'm assuming that you're going to flick it around using Power
That's
Query.
right.
Mm.
That's right. We are going to unpivot our data. And the key reason why we need to do that is, and this is something I really want everyone to understand. See, data comes in all different shapes and sizes. And the more structured your data is, the easier it is to manipulate that data. But just because you're manipulating data doesn't mean that it's going to be easy to consume that data. So typically, you'll have a source export from your database, from your accounting software, from your headcount platform, wherever. That source data could really look like anything. The key, if you want to be able to easily manipulate that data to get it into a beautiful dashboard that's easy to consume, you need to then create this middle layer. And this middle layer is what we're going to create with Power Query that's going to be in a structured format. And the key thing with the structured information is that you'll see every single column has one purpose. This says the actual account, this is the summary grouping, this is the date, this is the value, the financial statement, and so forth. And every single row behaves consistently. Now, I sometimes see people who create inconsistencies and when they actually create a table, and I won't judge you if you do that. But generally, there's a lot of predictability in what you get when you actually utilize this information. But a key difference between structured data and semi-structured data is we now have our dates in one column. Instead of having our columns going across horizontally and accounts going across vertically and the information in the middle, now all the information is really easy to just pull right over here. So if I wanted to get the information for 9/30/2021 as it relates to revenue, I could just do a simple sum ifs. Sum ifs, the condition here is that this is revenue, the date over here is if it's 9/30/21, and the value then sums. And when we have that middle layer, it becomes a lot easier to then set that up to a dashboard where we could just have really like one consistent formula that populates this entire thing, which is what we're going to do shortly. So I also created some named ranges here. What I did was I highlighted the information on the export and I called that a named range called actuals. And I did the same thing for budget. This is going to make it really easy to then load our information into Power Query. So you highlight the entire range, you click define name, and you define a named range. In this case, actuals, and in this case, budget.
So you're not using, is that a table? It's not a table. It's a name.
So,
Yeah, okay.
so that's a key thing here. As you can see, this isn't a table. I have the information actually as a named range, and Power Query will allow you to load named ranges into the editor so that you don't have to manually create a table each time.
Because normally it would just automatically convert it to a table, but if you use a named range, you don't have to do that, yeah?
That's a great call out. And that's actually something I didn't realize. And it was a big hit when I initially presented this at the Active Cell. People didn't realize this huge hack now. If you have a named range and you select it, you could load that to Power Query. So we're going to go ahead and click data from table or range. Amber is excited. And that is going to pull up the Power Query editor over here. Now, for those of you who are using Power Query for the first time, don't get overwhelmed or scared. It really is so simple. In fact, you don't even have to learn any coding. You could take your skills to the next level if you want by learning M, but you could also just click and make these transformations. So now we have the actual inside our Power Query editor, and we're now going to do the same, or rather, before, let me just see. So here we have the actuals pulled in as such. This is what we just covered. I think I just need to hit that over here. Okay. We're going to now make a few changes in order to transform our data. So we're going to click use first rows as headers, which is going to promote the first rows that we have over here as headers. We're going to delete the blank column that we have. And we're going to rename column 1 that didn't have a name in Excel. We're going to call it account. And this is the key thing. This is one of the most beautiful things you can do in Power Query. We are going to hold down Shift to select these two columns and click Unpivot Other Columns. And what that is going to do is that is now going to take all the accounts that were going like that horizontally, and that's going to put it in one column. So now we have an extra row for each and every combination as such. We are then going to add a custom column, and we're going to enter the word actual with the column name type. This is going to make it really easy in our final table to know what is an actual and what is a budget. We're then going to repeat these same steps for the budget. But what's beautiful about Power Query is you could right click the query and you can click on duplicate. And when you do that, you can click the advanced editor. Now, for those of you who are scared, you don't need to know M, but you can follow a little bit on what it's doing. As you can see, Excel is writing its own code with each action that you take. So we're going to replace actual with the word budget as such.
That
And
is
when we do that,
a trick.
the final step is to just append these two queries. So appending queries means we're taking one and stacking it on top of the other. So now we have this consolidated table of our actuals and our budget. We're then just going to make this last change to the attribute over here is going to be called date. And we're going to parse over here the information to extract the date. It's currently in a date time, and this will extract the date. And then the final step will be to remove all null values. And now we have our transform data. So this has a connection to each of those two tables now in the output from Power Query. And now it's going to be really easy to create our dashboard because we have everything shaped with our data that we need. So we're going to take just a few more minutes and then Danielle will go over Q&A.
Yep. If you
Awesome.
have any questions, pop them in the Q&A section and we will address that at the end.
Awesome. So to populate the information, now we're going to utilize a sum ifs. And the sum ifs is really going to be very simple. We are going to sum all of our values from that table if the type is equal to the column that we're in, the date is greater than the start date of our dashboard, which is a local named range.
That's something you've already created in the data, yeah? So you created a named range for that?
That's correct.
Mm-hmm.
And the date is less than or equal to the end date. And then the final condition is that it matches to the row that we are in for the actual summary grouping. And when we do that, we could really just take all the information and just with one formula, copy and paste. Now, for extra points, if you don't want to mess up your formatting, you can hit Alt-H-V-F to paste in the formulas.
Nice shortcut.
And when we do that, we can now populate our calculated metrics. So we'll get gross profit, revenue minus COGS, our gross margin, our total OPEX, and all these other ones. So that now that we have all of our data, all we need to do, select it all, copy, and paste. And remember, we have references dynamically with our sum ifs to whether it's a budget or an actual and which metric we are in. So one data set populates this entire dashboard. Now, like we spoke about, for good accounts, we're going to take actual minus budget, and bad accounts will take budget minus actual. These are all the good accounts, and these are all of our bad accounts. I guess other good accounts can be ending cash and cash flows. And that will get us to our variance column. I hit Alt 3 zeros to get this cool triangle.
Oh, that's a good shortcut.
And then to get the percentage, we can't just take the actual variance divided by the budget. We need to divide it by the absolute version of the budget because we may have a negative, and a negative divided by a negative will mean a positive, which we don't want. So we'll divide it by the absolute version of the budget, and we'll wrap it around an if error if the value will return an error if we divide by 0. As such.
Yeah.
And
Cool.
as we do that, the final step is going to be to populate our donut charts. And to do that, we need to create a separate lookup table for our charts. The key thing about charts is that your data needs to be positioned in a specific way. Otherwise, it'll be a nightmare to get your chart to look the way that you want. So with donut charts, we have the A value and the B value. The A value is what gets shaded in. The B value is going to be alternate shading, which we're going to make a neutral color like a gray. But we're going to actually make 4 series so that we could showcase good values in one color and bad values in another color. And we're going to utilize the X lookup to pull in that information from that dashboard. And now this is a key thing. I asked earlier, does anyone know how we're going to showcase this hit or miss? We're going to use custom formatting. So the way custom formatting works, anything before the first semicolon is what shows if it's positive. Anything before the second semicolon is if it's negative.
Ah,
And then this is the 0 values.
I thought you
So
used,
now
yeah, cool.
yeah, it could be a formula is another way, but I like this because now I could refer to the cell and add 10 to it, and it still will calculate rather than having text that will throw an error. So to get our first donut chart, we just select the information and click on donut.
Mhm.
And now we can make that prettier by making this background, the B variances, gray, and the positive variances, one color if it's positive, another color if it's negative. As such, and we then remove the outline. I then hid the legend, and now we have our chart template. And that's a key part over here. For those of you who have ever worked with charts, and anytime you wanted to change the reference to the chart, it would change all the formatting. I'm going to blow your mind here. We're going to click Save as Template. We'll right-click the actual chart so that as I then duplicate this chart to the right, watch what happens when I move this to the right. All of our hard work just got
Beautiful.
removed.
Love it. Absolutely love it. That is great.
All we need to do now is right-click, change series chart types,
Uh-huh.
and load in that saved chart template. And look at that.
Yeah,
Everything updates with the template that we set.
beautiful.
So now we just repeat those steps, paste it into our chart, and add some text boxes. And now we're officially done.
Oh, gorgeous. That is so beautiful. I love that trick because it can be so fiddly. And so this end part, actually getting the alignment and the linking and all of that can take absolutely forever. It can take as much as it does to analyze the data. And any trick like this is just going to make it so much quicker and easier to build.
For sure. Danielle, is it okay if I take about a minute or two to then just talk about where people can learn some additional skills like this?
Yeah, of course, of course. You had
Awesome.
a community, a new community that you're launching, is that right?
That's right.
Yeah.
Yeah, we actually just launched it earlier this month, and our first workshop is going to be later in the month. And we're going to be going over for the next 4 months everything that I know about financial planning and analysis. We're going to build a 3-statement model. We're going to learn how to forecast revenue, headcount on the P&L, and the balance sheet. And every month after that, we'll be talking about controllership activities. We'll be talking about Excel and how to get really good at Excel and everything else in between. But on top of that, you'll also get the opportunity to interact with other people who are going through the same struggles you're going through in your career, or maybe those a little ahead of you who have solved it. And this is a little bit about those workshops. We also have tons of premium content that we post every single day, and it's a really great place to get real-time feedback. And if you subscribe to the Pro plan, we also will give you access to our ModelWiz plugin over here that I was showing earlier, which gives you access to all of my finance and accounting templates. And then you can also get access to all of my on-demand courses, which we have a lot more coming this year. And that concludes the presentation. I'm happy to now answer any questions that anyone has.
Fantastic. That was absolutely incredible. I love that community. It looks really, really good. There's a whole lot of other stuff in there as well. I'll pop it into the when I send out the recording and the files. There is a link there. There is a question which uh, yeah, there's one from Asathi says, what if I have individual business unit P&Ls that I want to consolidate, but keep the business unit name for each P&L account without manually copying and pasting each line? And I think the answer to that is Power Query. It's similar to what you did with the actual and budget, and would you say that you would perhaps merge the different business units together the way that you did that stats consolidated query? Would you agree, Josh?
Yeah, that's exactly what I was going to reference how we did it with the budget versus actuals. In that world's greatest pivot table video, I actually do exactly this where there are different business units that we combine as such. So that is generally how I would approach it.
Yeah, so be sure to check out the video, your YouTube videos. All right, I think that is pretty much all we have time for. That was absolutely amazing. Thank you so much, Josh. I will send out all of the links and everything to everyone later on today. Is there anything else you wanted to mention before we sign off for today?
No, other than the fact that this was a really engaging group, which was really great. I appreciate everyone who showed, and I look forward to connecting with everyone offline as well.
All right. Thank you so much, Josh. Thanks everyone for your fantastic participation, and I'll see you again next time. Thanks everyone.